In Singapore's red-hot property market, developers are playing a high-stakes game of Tetris. They're trying to cram more living space into smaller footprints. But a seriously strange trend has popped up recently. Some of the absolute biggest, newest condo projects are completely deleting the one-bedroom unit from their blueprints, just wiping them out.
So this raises a massive question. If the so-called shoebox apartment is the most affordable way to actually get your foot in the door of the city, why are developers suddenly so terrified to build them, especially when prices just keep climbing?
Well, the problem is a classic squeeze. Look, to keep units affordable as private home prices absolutely skyrocket, developers usually just shrink the physical size of the home. It's exactly like a candy bar company making the chocolate smaller so they don't have to raise the price tag to $5. But, there's a limit to how small you can go before a home stops being a home and basically starts feeling like a literal closet. And this has created this massive gap in the market where the demand for affordable entry-level homes is just crashing into a wall of shrinking supply.
Okay, let's dive into this, because by the end of this explainer, you're going to understand the hidden math determining exactly what gets built right in your neighborhood. You see, developers have historically shied away from these tiny units because older versions were honestly pretty poorly designed, making them super hard to resell. Think of it like buying a first-generation smartphone. If the user experience is clunky and bad, nobody wants it secondhand, right? But setting that aside for a second, let's look at the rapid chain reaction of facts happening right now.
Let's start with the numbers, because this is where the math gets incredibly interesting. According to a May 2026 report by Leslie Yee in the Business Times, recent launches like Hudson Place Residences and Pinery Residences had absolutely zero one-bedroom units available. Zero. Out of nearly 900 combined homes, not a single one was designed for somebody living solo. No way, right?
And this brilliantly illustrates the wider trend. Even over at Tanaga Garden Residences, one-bedders made up less than 1% of the total inventory. The supply is just completely drying up. But here's the catch.
The real signal here is hidden in the massive price gap. The Business Times notes that a two-bedroom suburban unit is typically about 160 square feet larger than a one-bedroom. Now, if the price is roughly 2,300 Singapore dollars per square foot, choosing the smaller unit saves a buyer around $368,000. To put that into perspective, for a young professional, that isn't just a little extra pocket cash. That is the literal difference between entering the property market or being locked out entirely.
Think of a one-bedroom condo kind of like a fuel-efficient starter car. It's cheaper to buy, it's way cheaper to maintain, and the property tax is significantly lower because the unit's annual value is just smaller overall. This is where most people get it wrong.
See, while developers are actively cutting the supply, the number of people who actually need these units is exploding. Based on the data, the number of one-person households has jumped from about 12% in 2010 to nearly 17% today. We're seeing this kind of lonely planet effect. More people urgently need their own solo space, yet the market keeps handing them massive four-bedroom family suites that they simply cannot afford.
And let's move on to see how this builds with our aging population. By 2030, 1 in 4 citizens will be aged 65 or over. For a senior living alone, a 450-square-foot condo is like a well-tailored suit. It fits perfectly. It's easy to move around in, it's a breeze to clean, and it frees up all that cash they would have had tied up in a massive family home.
So the absolutely crucial point here is that this creates a massive opportunity for smart market analysis. While everyone else is out there chasing the massive family trophy home, the real tension and potentially the best rental yield is in the humble one-bedder. For investors, these units are high-dividend sleeper investments. They require way less capital upfront, and they often command higher rent relative to their size, simply because single professionals value being in a high-demand location way more than having a spare guest room.
And this next part changes everything. As we look toward 2027 and 2028, new tax changes and shifting demographics mean this less is more philosophy is becoming a pure financial necessity. So if you want a really practical next step to level up your investing skills, do this. When you're tracking the market, don't just look at the total price. Track the unit mix. Are the one-bedders missing from the blueprint, or are they being snapped up on day one? Spotting this hidden math is absolutely the key to finding those entry-level opportunities before everyone else does.
The future of urban living might be getting a lot smaller, but for those of us who understand these moving parts, the opportunity is only getting bigger.
So, what's your take?
Is a 500-square-foot apartment a smart, calculated investment to get your foot in the door, or just a cramped mistake? Let's debate the future of urban living in the comments.